The reduction in interest rates, the household has certainly seen an improvement in terms of the level of non-performing loans and bad debts. And therefore, our retail business has certainly enjoyed some improvement there, even though there's a negative impact because the endowment interest that we earn on our capital as well as on our deposits has certainly been negatively affected there. But we generally see an improvement in the South African economy, and the numbers reflect that improvement.
We know that consumers are still a bit cash-strapped. They still have high debt burdens. Is the consumer out of the wood? Are we going to continue to see this improvement in your retail banking business?
I think it is going to take a while before the household debt to disposable income, which is by the end of December was sitting at about 78%, improves significantly from those levels. And therefore, the repair of the balance sheets and the deleveraging that still has to happen will take a while. And therefore, even though we're seeing an improvement and the confidence levels are certainly improving, I think the improvement you will really start to realize in 2011.
How about the corporate customer? We know from other banks that they're only expecting those to peak, bad debts from corporate customers to peak perhaps in the second quarter of this year. What's your experience at Firstrand? Are you seeing the same thing?
It is very similar. We think the non-performing loans as well as the bad debts are going to peak somewhere around the middle of the calendar year.
Now, some of the weak spots that we saw in your previous year, RMB, Westbank, how have they improved as economic conditions have started to turn around? Because I see in Westbank in particular, 93% increase on June.
Yeah, Westbank has been a turnaround story. They've been focusing quite a lot on reducing costs, as well as collections and managing their large book in terms of the lending that particularly happens in the retail space. So certainly, as interest rates have come down, that area has improved. But also the international operations have been exited to the extent that they didn't fit part of our strategy. And one particular operation, which is Coloured in the UK, is now turning a profit. There's been a lot of focus on sorting that business out. And as far as RMB is concerned, the impact of the legacy portfolios has been diminished in this period to December 2009. And also there's been a much bigger focus on efficiencies, on growing the business in line with the broader Firstrand strategy, particularly in Africa, as well as our relationship with China Construction Bank and our branch in India.
When will those legacy portfolios finally be out of the way? Issues like deal stream, when will they run through your book?
Well, it depends on the liquidity in the market. Some of these portfolios are relatively illiquid, and we continue to reduce our exposure to them. I think the important thing is that we are adequately provided in terms of those portfolios, and that applies not just to the deal stream portfolio, but also to the overseas portfolios, the so-called SPGI, as well as some of the legacy portfolios that we had there.
You mentioned China Construction Bank, the relationship that you've struck up with them. You've also set up a branch in India. Are you starting to see any benefits from these relationships and from setting up the branch in India?
Absolutely. The relationship with China Construction Bank is continuing to generate increasing volumes of deal flow, particularly looking at Chinese companies that are investing in Africa, and therefore there's advisory fees, lending, as well as transactional activities, which we continue to see with our relationship with CCB. The India branch is getting a lot of traction, particularly in areas where Indian corporates are moving into Africa as well. But also you see an increasing number of South African companies, particularly that are moving into India.
Of course, we have lots of South African companies also moving into Africa. We spoke to you recently when you were in Nigeria. What sorts of progress have you made in expanding your Africa footprints? Of course, we know that Nigeria's banking sector is undergoing change. Are there opportunities there for you? Are you going to take those opportunities?
We'll continue to investigate opportunities in Nigeria. We are following the Central Bank of Nigeria process, as well as looking for opportunities in the strong banks. Beyond that, we are growing our footprint in Zambia. We're waiting for regulatory approval for a banking license in Tanzania. We've just recently received regulatory approval to set up a rep office in Angola, and therefore we're making good progress.
Momentum, recovery in equity markets obviously helping your momentum business. Year on year, strong growth in profits. How How about operational performance though? Are you retaining clients? Are you getting new business onto your books at Momentum?
Absolutely. If you look at Momentum's operational performance, the margins, for instance, have been maintained at 2% despite the tough economic conditions. And the costs have only gone up by 1%. And that's an indication that they're executing on the strategy, particularly given the tough economic conditions. At the same time, the model which Momentum has established, particularly distributing through brokers, continue to be a very strong contributor to growth.
Sizwe, the progress that you have made in the first half of the year, is that continuing into the second half? We're already a couple of months into the year. Do you see the consumer and the business customers starting to get back on their feet?
Absolutely. You know, as the South African economy, as well as the world economy for that matter, continues to improve, we enjoy the benefits and we see the benefits in our business. But I think it is fair to say that the recovery is going to be rather pedestrian and is going to take a while before we go back to the levels that we saw up to 2007.
Return on equity, 17% is well off its peak. When do you expect it to get back to the peaks that we saw a few years ago?
Well, as our performance, particularly in terms of earnings, improves, we should see return on equity also start to improve. But I think it is important to mention that the sustainable level of return on equity will be somewhere in the lower to mid-20s.
And when will you be there? A couple of years, you say?
Well, it all depends on what happens to the world economic environment, as well as the markets in which you operate.
Of course, we know that we are getting tougher regulation and globally. Do you see that having an impact on your business going forward, particularly in areas like proprietary trading?
Not really. I think if you look at some of the proposals that are coming forward, particularly out of Basel III, that relate particularly to capital adequacy, we don't think there'll be an impact, particularly in that area, because South African banks and Firstrand are particularly well capitalized. There may be some impact in the liquidity regulations that are being proposed, but there's still a lot of discussion which has to take place in that area.
Do you think they could have an impact on your own proprietary trading and hedge fund type operations?
Not really, because the amount of capital that we allocate to prop trading as well as private equity is not particularly large in the context of the total capital of the bank, and therefore we don't think that's an issue which is going to particularly affect us.